Hey everybody, Mike Fairborn here, sitting in for Cameron May, who is out sick. Hope he gets feeling better. Folks, welcome to Managing an Options Portfolio. Uh, Looking forward to our discussion today. I really wanted to dive into ways to sort of manage an existing position or a new position on a stock that has been range bound, either over a short period of time, a long period of time. There are interesting ways to do that to try to add and generate additional income through the selling of additional options. So I'm looking forward to going through that with you today. An approach that I've looked at and utilized over the years. I think it's interesting because a lot of times markets do trade in a sideways action, in a sideways pattern over extended periods of time, markets and individual stocks, and managing options around that time frame can be interesting. So I want to show you just a general approach. It's been out there for a number of years, but one that I think can have interesting aspects to it. So with that, welcome all of you today in the chat. I'm joined in the chat by my good friend Brent Moores. Folks, any questions, comments you have, throw those into the chat so we can address those for you. Let's do this. Let's dive right into our disclosures to get the show on the road here, get started. So first off, I wanted to state that options do carry a high level of risk. They're not super for all investors. Now, the information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Schwab does not recommend the use of technical analysis as a sole means of investment research. The paper money software application is for educational purposes only as well. Now, investing does involve risk, including the loss of principal. If we do get into rolling strategies today, I wanted to state that they can entail additional transaction costs, including multiple contract fees, which may impact any potential return. Last slide here. Just looking at this, the past performance of any security strategy does not guarantee future results or success. The paper money virtual trading application will not assign a short position early, which is different from real trading. Okay, so with that, let's get going and taking a look at what we've got. Welcome to you, those of you just joining us. I am not Cameron May, as you can see. I am Mike Fairborn, but I'm looking forward to our discussion today. Now, what we haven't seen is a lot of sideways action in the S&P 500 index. I've intentionally thrown out here a 2-year chart highlighting where we're at right now. In fact, if I zoom in on this, we can see this is an all-time high range again today. Markets, just looking at a quick glance at the futures over here on the left-hand side of the screen, they are doing actually very well today across the board, right? We've got all of the 4 major market indices up here in terms of futures, all positive, breaking higher, and all else equal. And I've been mentioning this in some of my other classes, is that, when you take out a prior high range, like we did right there above that 6,000, we actually went sideways. And sideways is not a bad thing, if generally speaking, through a technical perspective, if you are taking out a high level. For example, if you can get above a point, okay, you get above and go sideways. A lot of times those are like little bull flags or bull flags generally, and a lot of times they can go higher is what traders will look for, okay? So we're seeing that follow through here today. Interesting time because this upward move is going to tie in to some of the aspects of our discussion here today in terms of options. Now, one other thing before we're done with this slide, with this image, I should say, is I'm going to back out again, and I'm just going to highlight here for you a couple of different things. Now, I have drawn in here kind of the mean or the median, the sort of the mid-range, you could say, of the S&P 500 and kind of the general slope that it's gone on to the upside. In fact, a lot of times traders will refer to as a reversion back to the mean, and that's something that they may be referring to. One thing that can be helpful too is go ahead down here in the bottom right-hand corner of the screen in the drawing tools if you want to get a sense of where resistance could be, because it's difficult to check on resistance if we have not gotten to higher levels yet, right? If we haven't gotten there, it's really tricky. Where might we find resistance possibly to be at? So what you can do, you can draw lines off the bottom. Specifically, if we're looking, at the upper range, I'm going to draw them off the top right here and just draw some lines in here, kind of off of the prior highs, giving us a sense of where that upper channel line might be. You can see that we're kind of trading at that level right now as we speak. So these areas, we got close to it here. We actually got, kind of close to it here, but the trend did begin to establish more strength as of late, where we're touching off that line. And you can see we touched here. We did pull back from this level. Pull back again here. Will we get a pullback here? Will we break out? That is the question. Will we break out higher and extend to higher levels here, whereas this upper channel line can then become the mean retracement. So in other words, it might retrace all the way up to another line up here, like a measured move, like possibly this same distance to the upside here in a new area, but that's kind of where we're at right now. And right now we've just kind of been following that standard sort of seasonal approach that we get this time of year, on average, not every year, of course, but you can see where we're at right there. Average of the last 5 years of the S&P 500, showing that we do tend, and that's the key word. On average, we go higher towards the end of the year. That still gives us a little bit more room to go to this to the upside, but you can see generally it hasn't been a strong move. It's just been kind of like sideways. Does it follow that upper trend line and just kind of keep bouncing it or holding near it? That remains to be seen. But you have to say this: if you're making an all-time new high again in the markets, folks, you got to say that is a trend right there. It's just very difficult to argue with, right? We've just seen so much strength, higher highs and clearly higher lows as well. All right. So with that, that's just kind of a general broad review. I want to talk today about using the short, let's say a short put vertical and a short call vertical. And want to look at both sides, whatever side we're looking to potentially put on. It's just kind of a strategy that I know a number of different traders have employed, something that I've employed in the past myself, just to broadly speak, right? In terms of trading over a range, it is a way to potentially do that. Putting on different options and managing those options over different time frames. Let's just dive on into it so I can highlight what we're saying. We'll go full screen here. We'll go right into our first example here. Although this is not an example of a trade we're going to put on right now, it could be. I just want to kind of highlight what a lot of traders, investors might use to employ a strategy like this. And so what we're looking at here is a long upper channel that obviously has had a lot of resistance that's resided through here, right? Resistance has been strong all through this range. And here we've come back below that level, and here we are dipping below that point right here. Now, when you have a longer term resistance point and you are finding it difficult to get above these levels, and there has been a history, this is a key point. There's been a history of price action that's come between these two ranges. I'm drawing obviously like a perfect example here. You get some of these a little close to this over time frames, but a lot of times there is a little bit of variation. But what we're looking for is either a short term, it can be a shorter term range, or a longer term range to employ a strategy like this. What we're trying to see first is that there are defined levels of resistance up top and support down below, where a stock is traded for a long period of time. And when prices get up here, we're still looking at and really carrying with us a neutral aspect. So we're looking for this same action to occur, although we're mindful too that it could potentially break out higher, and we'd want to be mindful of that. It could break down lower, and we want to be mindful of that. But by and large, we're going to be trading a sideways structure here. Now, on the upper end, we're looking at the short call verticals that have been in line with this resistance. Okay. Like I said, this can be over 3 to 6 month time frame. It could be over a year. There are longer term examples. There are shorter term examples. The first few I've got are actually shorter term, where we can actually put some of these on, and I'll show you how this could be used to generate an additional form of income along with the short call vertical. What do we have with the short call vertical? Well, we've got, if we are selling over here, we've got a call. Let's just put it over here. There's a strike price over here. And with that strike price, we sell the call and we buy one a little bit higher up top here. And I'm sure Cameron's gone through several of these examples before. But what that does is it gives us a little bit of room above the resistance level for prices to do what? Potentially, break up, kind of test that resistance level, giving it time to go down. Now, time is a real asset here when I say time, because a lot of times at these longer term resistance levels, prices just are very slow. There may not be a lot of action if they're not breaking out, right? And that can help us in terms of the theta decay. Okay, because we know we make our max gain when the price of the stock holds below that short call, right? And just holds below that level, which we're expecting it to do. Right, that is the expectation. Now, obviously, we mentioned that options can be assigned at any time, but very, very likely, I mean, if you're holding below that level, then these are not going to be, you're going to normally not going to run into assignment. So you're looking to just collect the premium up here. Okay. The next point is if prices go down into the short put vertical range, is what we'd be looking at down below here. So if prices do make their way down, and maybe it's somewhere like this, they start to get below the 50% level, like right through here, there's a 50% range, or for example, they just come back down and they're just very near or even bouncing off of support, we would put on that short put vertical. Now, let me ask you guys this. What would be the impact of the premiums if the price of the stock has been falling? What happens to puts if the price of the stock falls? Do they go up or down? They go up. We're selling options. That can only work in our favor if prices are going down. That could be a positive for us, right? That could be a positive. So if we're down here selling, in this case, we're selling a put. I got to put a minus in there, sorry. And then buying a put down here to create the short put vertical. We found a way to kind of manage a portfolio of options that has either a short call vertical or a short put vertical, and then wait for the direction of this sideways trend to do what it is shown to do historically, and that would be our anticipation, that it goes up if it's down and down if it's up, testing resistance. Okay. So as prices are going down, those the premiums themselves would be going up. So let's just put that in here too. So just a few different things we're planning as we go through and just seeing how this strategy would work. But the premiums, all else equal, should be going higher. We know that the delta, which actually measures, how much the price of an option will move based upon the amount of the delta itself. That's like the core function of it. But looking at that too, I mean, those deltas obviously for the puts, because it's a negative delta, are going to be going up when prices are going down. So we could collect more premium too. And if these two are on at the same time, so if we do have the short call, and we do have, we'll draw an arrow over here, and they're on at the same time, what do we have? We've got for short, I can't type all this out or write this out, iron condor. So we are trying to collect premium on the top side and the bottom side by letting the market play out and doing what it does and just being very patient. Remember, if you're patient and prices aren't doing very much at all, that can really work for us on the short call or the short put because of, well, the theta aspect, which is the time decay of the option, which is 7 days a week. All right. All right, now that's a lot of drawing. Let's go ahead and pull back our chart. But I wanted to just show you now, as you overlay this, you might get a sense of what we're looking at. This is a very, very long-term chart right here, but it is an interesting example nonetheless. So for example, if I had ranges, and there can be different ranges over time, this might be a higher low in here. So we might have this range that comes up through here. So somebody could look at maybe the short put V down here as an example trade. Okay, we're not quite there yet. We're about 50%. Let's move into one right now as we get into our core examples and go through each of these. So here is on semiconductor. Do you see the very, very tight and short range here that we have on? Okay. Upper side, close to 80. You could say between 75 and 80. I'm going to put another line in here. It's not always beautiful, how these line up. And then on the lower end, well, after this gap up that you saw on an earnings gap, what did we do? We kind of held this level. So what traders could potentially look at are indications of prices coming down to this level. If they thought this was going to remain in check, intact, the sideways channel, are getting close to it and holding it. Maybe they get a close above the high of the low day, which we don't have yet, but maybe they do get a K hold. Maybe they get a bounce of some sort. Maybe, it's kind of getting a K hold like right in here, for example. But there you have it. right? So possibly a K hold, like right in here, a bounce off these lows, or you might get a candlestick pattern, a potential reversal pattern, whatever the case might be. You could put, somebody might in this strategy look for a short put vertical. And what would they do? They would keep that on, until it got up to the short call vertical range, where they might put one up here and try to just add additional premium. So we're selling down here. We added in down here. We added in up top. And then we've got two different ways to do that, but it's all around the market direction. All around the market direction. Okay. So if we were looking at this, what levels might we consider? Let's go ahead and take a look at the trade tab and just see. We've got support around 65. We might be wanting to sell lower. We had a big move down lower today. Probably some of the semiconductors. This isn't the first time we've had these big red candles to this support. We've had it a number of different times actually through here. So it's not our first time. Don't know if it'll hold that level or not, but let's keep eyes on it and see what we got. Now, this 44 kind of falls between that 20 to 50 range, 20 to 50 day range, I should say. We got 44 days to expiration. And you can see over here, where do the deltas sit? Okay, there is the 65 right there. It's right now, so look at this. We've got very good liquidity on this option. And you can see that this is the range, the spread here. We've got very good open interest here too. This is just kind of an example. But as we look at this, we'd be looking to put in that short put vertical here. On a down day like this, as we're coming down further, we might just want to wait for an additional day. I'm going to go ahead and just put one on anyways as an example trade, just so you can see it. And these would be some of the comparables we could look at. So this gives us an estimate of about a 38% estimate of a chance that it will go below that 65 by expiration. So it's still, better than a 50-50, obviously, right? And a lot of traders will seek for a 20 to 40 range on the delta. But let's look at a couple of these right now on the short put vertical. Here's the 60 to 55. If I click on this, the 60, gosh, that's big. Okay, let me see. Can I? No, we're just going to have to scroll up. There we go. Let's look at this lower one first and see what we get on it. So that generates only about a 74 cent credit. What does that do? It gives us quite a bit of additional flexibility below, like say, for example, this range right here. So if I just pull this down a little bit, you can see it would have to go all the way down to that lower rung before that short put vertical gets hit, for example. So I've seen some traders, they might even do like for example, they might start off with the lower one first. They might go, hey, you know what? I'm going to sell the put here, buy the put here. I realize we're on the monthly contract and we're looking at a wide range, very wide range, aren't we? They're 5 wide, sorry, not at 50. I didn't mean to put it all the way down to 50 here. It popped all the way back. But anyways, about 55. But it would have to go all the way, we'd be anticipating it to go all the way back down to 60. So that to collect on this trade here, we'd be looking for prices to do what? They could go down quite a bit. They could go sideways over this range, and they can, of course, go up. Preferably they do go up, and then we can look at the short call vertical if it stays within its range, if that's our expectation, right? As well. But it does give us, pointing this out right now, I mean, obviously 3 aspects to still collecting the max gain on that short put vertical. I'm actually going to look at the 65. I'm going to be a little bit more aggressive here. And we're going to go with the minus 65 and the plus 60 for our short put vertical strikes. Okay. Quick note too, always be mindful if the price of the stock does go below the strike price, the upper strike, in this case, the strike that we're selling by expiration, the short strike, then we would be very likely to be assigned shares of stock, and that'd be 100 shares for every one contract. I'm talking about standard equity options contracts there. Okay, let's go ahead and take a look at the 65. This one is going to generate more, the 65 to 60. So we'll start over here. So as opposed to 74 cents, it's quite a bit more. It's $1.56. But that still gives us some flexibility. Where are we at right now? Well, we're close to 67, so 65 is right here. I realize we're going against the trend here. Now, I think normally what traders would do, let's back out of this. In fact, let me just take these off for a second. We need a little bit more space. There we go. All right. traders might want to wait, even though there has been a history of a lot of touches coming through here and just below. They might want to wait just to see if, there's just not a big, gigantic red candle. We're just kind of going ahead of this right now and placing it early. But let's go ahead and take a look at that right now. So there is the credit on it right now. Let's go ahead and confirm. And let's read the dialog box and see what's going on here. So with that, we can see that the break-even stock price is at 63. Okay. Max profit is 157, less any commissions. Always be mindful of that. The max loss is 343. And that is also our margin requirement right there. I'm going to go ahead and put this trade in right now. And there is the fill on it. But what we've done is we've employed already a strategy because we're forward thinking here. And we're thinking, what can happen to the price of the stock if, in fact, we come back down to this lower range and start to reverse higher? Do we have another strategy in here to potentially generate additional income through the range? We do, and it's really ultimately the creation of an iron condor. And this strategy is really the legging in of an iron condor is what we're actually doing here. We're not putting one on at the same time. In fact, it's just simply a leg in. We go with whatever side is giving us an upward, if it's going down, we initiate from the bottom, the short put. If it's from the upper end, we initiate from the short call vertical. That's the strategy here, folks. And that's really what the focus is. But it's a leg in to an iron condor to try to generate dual income, potential income there. Okay, let's continue on. I've got some now too I wanted to hit that are a little bit longer term in range in nature, but let's CVX, and you'll start to see what I'm talking about here. A little bit longer. Okay, so Chevron. Where are we at Chevron? We'll be able to flip this around and take it from the other side now. We can see that we did have resistance, getting close to that 170 here. We still have it kind of through there. As of late, there's a little bit of a dip in the chart as well, but you get this general feel that there's this range between, it's really about 167.50 to 170 on the upper side. And this can be the range for a short call vertical up top here. Now, are we coming off that recently? Yeah, we are. We've got a big red candle. Let's just try to initiate one on the upside. But before we do that, what do we have on the downside? I'll flip some colors here. Okay, down here, you can see that we'd maybe down towards the 140 range. Longer term in nature for sure. Maybe we put these on early and they dip, and maybe it takes it a month or two to come down. And by then, the short call vertical is expired before we look at the short put vertical down below, right? Because it's a longer range. And you're just going to run into that. Now, obviously, if we had longer dated option contracts, because we were trading this range for a longer period of time, maybe instead of 50 days, somebody goes out to maybe 80 days or something, just as an example, right? And that would ultimately create an iron condor, but over an extended period of time. Okay, so let's do this. Let's take a look at the other side. Let's go to the trade tab right now. We can see that 165 is our resistance level up top. And you'll notice over here that one of the interesting things is that, some people might just say, well, hey, you know what? I'm going to go ahead and just sell my call here now because we've already started to go down. Well, here's the challenge. When you get these longer term resistance levels, how many times did we just hit off the top and go straight down? This one kind of hit, not exactly. We still were up there for a little bit. What about this one? Broke down sharply, came right back. Maybe you don't want to necessarily be underwater. Look over here. It was a big sharp move down. We came back actually to test it a second time. We came down here. We came actually testing it almost again and again before we really got sort of the meat of the move down through here. So what we're going to do is still look at that 165 as opposed to the 160. Now, any questions on this thus far? All right. Thank you, Brent. Looks like we're all set on the questions. We should be good to go. Let's go ahead and take a look at our trade tab then right now and see where we're at. Okay, so we're now on the call side. So very important we get that down. We got the call side over here. And we were looking at the 165. What does that look like in terms of our delta? 165, it's right into our range. So right in the mid-range between 20 and 40. A lot of times where traders will look to potentially sell those, right? And so let's look at that one. So here we go. So we've got this 165. We can go out to the 170 here. Wow, tons of volume on the 170 in terms of volume today. My goodness, that's a lot. But look at this open interest on this as well. So we love that open interest. We love the volume to be strong because it does help to facilitate just a better spread between the bid and ask prices. We clearly have that. It's just nice to see. I just have to point that out every time on these companies. All right, so let's pull this down and we'll go ahead and just lift this up. I left click on the bid and now I hold the control button down on the keyboard is the way I'd like to do it. That wouldn't matter if you're on a Mac or a PC. Same process works. Hold the control button down simultaneously. Now press the ask price here, and there you go. There is your credit at 102. So what is this doing right now as we look at it? Well, it could be a leg into an iron condor, but it's sort of a longer term trade. We're still just trying to capture it, really kind of utilize prior resistance levels here, longer term in this case, with weakness to the downside. And we're actually capitalizing on a move down or sideways, actually, right? Down or sideways. But the 165, I agree, it's a little bit tight in there, but there you go. You got the 165 versus the 170. Let's go through this run right now and see what we've got. There you have it. So yeah, break even at 166. You've got 166.02. Max profit at 102. The max loss at 398. That is our buying power effect as well. I'll send that through right there, and we'll see if we can get a fill on that. Okay. So any questions on the management of this leg in iron condor? Let me know. Throw those into the chat. Keep an eye on there too. If there's anything you need me to show you visually, happy to do that. Let's see. How are you finding these crab walking stock? Yeah, exactly. And that's what they are, Greg. They are crab walking, aren't they? On all those legs, very, very slowly. They don't tend to move too quick. What I was doing actually is, and this is just an approach too. You can do this over here. You can actually look for these companies with a beta column, a beta, and a lot of times you get the slow movers. They tend to be range bound quite a bit. So a lower beta, for example, I'm going to plug it in. This is one thing you can do. So the beta of the beta represents a beta of 1 is the S&P 500. Those companies that are, I was looking actually in the S&P 100. I looked at a couple of them in here. Other ones I just picked up recently just by going through different stocks and looking at a number of different stocks. But if it is below that one, yeah, hey, Greg, you're in that crab, maybe some of the more crab walking type stocks. They just don't have the volatility, right? That's one way to do it is you go through here and you might be screening out to either column, for example. Like right here, I had this flags column in here, but I'm not really actually using it. I'm going to take it out here for a second. And there you go. There's the beta. You can organize this too. Like, for example, here are those that are less than a beta of 1. Whoa, a negative? Wow. Oh, wait, let's see. Let's just do this right. Yeah, you got some negatives in there. Don't know about that, but look at some of these. These are very, very slow. I mean, they're half as fast as generally the market. I wanted to look at actually Mondelez today and Pepsi. They were both a couple of these that matched that sort of, yeah, you got it. Kind of a, oh, they're slower, crab walking. Up top here too, by the way. You can check that out, Greg and everybody. Just under the underlying, that little drop down arrow, click on that, scroll all the way to the right. We're right about 1 here on the beta. And this stock has more volatility, but not as much. I mean, it's about the same as the S&P 500, but it's kind of meandering, which happens a lot of times with the oil and gas area as well, those groups. Actually, the next one I wanted to look at was actually Mondelez too. It was actually, I think it had half of the beta size, half of the beta of the market. It was about in the 50s somewhere. Can you see the range in here too? This is a really key point because after such a big dip, you might just be saying, hey, I don't know if I trust like a strong upward move as much, but what I would trust is a sideways possible move, which ties into that slow walking around those ends, right? I mean, look at some of these. This is just dragging through here. And I mean, it's already dragging a little bit as we're getting into some of these resistance levels. That might have been like a dip below. It was a couple points lower. This is right around 62 range. but you can see historically on a 2-year chart right through there, massive, support right through there. And like, for example, if it goes that long, and you're still at your support level holding, your original, let's say, for example, this is all in hindsight, but your original SPV might have already expired. So then what you could do is put another one on as you're waiting for prices to get to the upside for the short call verticals. Okay. This strategy is really one that's about patience. It takes a little bit of time, but like I said, you may be getting income based on that patience, based upon what the market is doing too. Because if it is going sideways, well, that's rewarding your patience in the form of the theta decay. So this might not be like a core strategy that you're using, but it could be a way to generate potential income off of two sides. Okay, so here we go. We're right in this range. And what do you say? I mean, we've already broken a little bit. We're kind of testing that level. But this 62, I'm just curious what the delta looks like at the 62 range as we're all the way down here. And again, folks, you can always wait on these for a little bit of, we've already got some indication. Notice we've bounced back up to that level already, that there might still be some support through here. Support at these levels too. All right, so let's do this. Let's take a look at it for the short put vertical and see what those 62s look like as well. We've just been using the monthly contract, but the 62, there is a 6250, a little bit higher. Maybe that's okay. It's just slightly above that range right there, right in this range. Let's look at that level for now, 6250, and we can decide to go either a full 5 wide or a 2.5 wide. So let's look at the 2.5 wide first. I'm going to left click on the bid. We're on the put side again, and hold the control button down, click over here. We've got 70 cents. Okay. There's a 70 cents. Now, if I change this 60 to a 57.50 and go for a full 5 wide, what does that do? Okay, so 95 cents. We can kind of compare these two a little bit. Let's go back to the 60, and I'm just going to, wait a sec, did I do something wrong? I did. Hang on, I don't like how it does that. I'm just going to start over. We're selling the 62.50 and buying the 60, the 70 cent. Now, if you click on this, what do the risk factors look like here? Well, the max loss on that tighter spread is 180. It's going to be smaller. You get a bigger credit on the other one, but let's consider this. Okay, so 70 to 180. Look at the comparables here. 70 to 180. Let's go to the 65. Now the full 5 wide here. You get a 97 cent credit, but instead of 180, the loss, the max loss on this particular setup, as we've looked at already, is more than 2 times. It's greater than 2 times, whereas the max profit went up only moderately, right? We were at 70 cents, so we increased by about 0.27, not anywhere near 100%. This is over 2 times, greater than 2 times on the max loss. So I wanted to give that variable to show you what we're looking at there, particularly if you said, I want to retain that loss, that max loss at a 180 by choosing the lower, I should say the higher strike price to buy that put at. And I'm only giving up a little bit in terms of the max gain. Let's go ahead and just do that one as an example. It's pretty big difference there, isn't there, though? Okay, let's go back. We'll change this one to the 60. All right, and let's take a look. So it's 70 cents, but yeah, it's a lot lower. And as a matter of fact, look at this. If we were to double up on this contract as an example, right there, what do you see here? We get a higher max gain, do we not? What was our prior max gain? 97. Now we're at 140. It was 97 and we were risking 403. Well, now we're getting 140 and our max loss is 360, which is less than, I have to point to it. Sorry for the arrow, that doesn't look great, but less than 403 if we were choosing the shorter strike Everybody see the benefit there of that on a couple of different fronts. Okay. We'll go ahead and just do this at 2 so we can see this and just send it on through. There we go. We did the 2 contracts for the shorter, better than just the one at the wider. And by the way, the spreads are actually a little bit better with, well, about the same at the 60 and 57.5. All right. All right, let's do this. As our final one, want to point this out. Now, what if we had the situation where there was CSX over here? And look at CSX with me. It's kind of in the middle of the range, right? You can see over here that, well, you know what? Over a 1 year's time frame, maybe a little bit more obvious here. Yeah, you can really kind of see that there's a little bit of sideways channel. There was the higher end up top. There was the lower end down below. Folks, when we are in the middle here, maybe of the range that we're looking at, we're getting very close to that middle. I'm just going to eyeball it. I don't know. We're not quite there, but we're darn close. That is where traders might elect to put on the iron condor and just buy on one end and sell on the other at the same time, creating the iron condor, not legging in. I wanted to end on this because I think it is an important point. A lot of times you just might be in the middle of that range where you're saying, gosh, you know what? Why don't I just try to hold within this range, upside and downside right there? See what I'm saying? So let's do it. Let's just put this one on at the end, and we'll set these up just based upon our ranges. So this one's about, let's see, 30. How does this set up, by the way? Ooh, we're not going to be able to do this on the, well, let's see. We might be able to. If we did it all in one shot, that is 37, 36, 37, and 33. Well, let's just set it up right now. Here, let's start with the call side here first. The 37, oh boy, there's not much there on this one. We'd have to go to our weeklies and do this. We're shortening our time frame just a little bit, but you can see over here how what this would look like is something along these lines. There's your 36, and we said the 36 is right there. The 37 is probably where we'd be looking at. 37 has that 22 delta, 36 or 37. We can take a look at just as an example on either of these. Okay, so we can go like this. I'm going to do a 2 wide here. There's my 50. And, oh, there's not my orders. Okay, we'll do a 2 wide, and we'll click down here. There is the short call vertical. Now we can go over here and look at the short put side, since we're sort of in the middle, and we say maybe it's between 33 or something, a ways away. It's a lower price stock, so we're not getting a ton of open interest. I should say a lot of premium here. Actually, we're not getting a ton. This one's at the 29. I'll use the 29 delta. We'll go 2 wide here. Boom. Now we've got all 4 legs in here. Always be mindful of commissions as you've added in 4, but you can see over there, boom, it gives it to us. There's our confirmation, folks, of an iron condor. Let's right through it right here. Here is your short call vert. There below in the puts is your short put vertical. A way to manage a strategy here, trying to sell on both sides ultimately, if possible, or over periods of time to generate that income, folks. Well, I hope you found this informative, useful. I don't know if you'd seen this before, and so I wanted to throw it out there. It's just an idea, something to look at, something to consider under different, scenarios in the market you could kind of take a look at. So, folks, be sure to subscribe. Bottom right-hand corner of our screen. Love to have you on board. Got over 125,000 subscribers. Folks, if you like today's presentation, do me a favor, just smash that like button. It helps improve the YouTube algorithm to keep this content coming up more frequently. Again, follow us on X, my handle, Mike Fairborn CS, and Brent's is Brent Moores CS. On that note, have an awesome rest of the day. See y'all.